Hey guys, this is Average Trader and welcome to week 17 of our trade logging series. This week we made 4.4R, so almost 4.5R, which means we made 4.5 times whatever you risked this week. It was a relatively easy week. We didn't even trade Monday, right? We didn't do a single trade Monday. Although we did scan Monday, markets were really choppy Monday, so technically it was a 4-day week, right? And we still made 4.5R. So, that just goes to show, right? Quality over quantity, right? Quick reminder, if you do want to see these trades live, head over to our chat room. Link is in the description. We're the only chat room on the market, right, that promises profit each month, right? If we don't make money each month, you don't pay us a single dime. Other than that, let's get straight into the first trade of the week. And the first trade of the week is PayPal, and we got 2R out of this thing, 78.80 by 78.30. Okay, and we took this off of a engulfing green bar. Look how strong this 100% retracement move was, right? So 78.80 for the anticipation entry, right, by 78.30. So we gave it a little bit lower than the last red bar, right? But this huge engulfing green bar, right, is a massive sign of strength, right, in this stock. So really lucky for us, and we got 2R pretty painlessly, I would say. Next trade we took was Tesla, 188 by 189, and we got out of this thing break even. We took this back over here, 188, and it was chopping around, right? So we moved our stop loss to break even relatively quickly, right? After this long 2-minute topping tail formed, we decided to move our stop loss to break even, and this still comes down to experience, right? Technically it didn't hit 1R target, so technically I shouldn't have moved to break even, but we did, right? And got out of this thing break even. Next trade we took was Amazon, 88.35 by 88.80, and we got stopped out of this thing. It was a really nice breakout, right? Really nice breakdown, but unfortunately got us triggered in on one of these bottom tails. I don't know which one, and eventually, this huge green bar took us out. It was a gap down from the previous day, and markets just took a run higher, and nothing you really can do about this. I would take this again any day of the week, right? Really nice 1-minute breakdown. Next trade was Tesla. Once again, 186 by 188, this time with a $2 stop, okay? And we took this off of an anticipation 3-bar play on the 1-minute. As you can see, it didn't fully form, okay? But we got triggered in off of this doji bar right here. Stop loss is 188, right? Which is half of this, extended red bar, right? And pretty painless trade, right? I would say not really any engulfing, really any retracement at all, right? Just went straight to 2R. And I think, if I remember correctly, Tesla actually, if you took this trade, it actually went around 3.5R, right? So if you're aiming for 3R, you would have gotten 3R out of it too, right? So really good trade overall. Next trade of the week was CRWD, 135 by 134, and we got out of this thing break even as well. And we took this off of a breakout right here, okay? And experience has told me once again that these stocks that these momentum plays that pop and don't go immediately, right, usually tend to not work. We really expected the stock to pop over the high of the day, over 135, but as you can see on the 1-minute more clearly than the 2-minute, it popped over 135, left a topping tail, and started to come back down, right? So that gave me not a lot of confidence in the stock, which therefore made me get out break even on the stock. Next trade we took was Wynn, 75.50 by 75. I actually forgot to take a picture of the 2-minute chart on Wynn, so you're gonna have to find the 2-minute chart if you want to look at the pattern for yourself. There is a daily chart I put on here though, so this is Wynn's daily. As you can see, this is one of the reasons why we took this trade, right? First of all, it's gapping above, right, prior resistance, right? And it's gapping over a topping tail, right? Huge sign of strength, right? All the way above 75. So we took this 75.50 by 75 with a 50-cent stop, and we got 2R, excuse me, out of it pretty quickly. Next trade we took was a BA 174 by 175. And we got stopped out of 0.6R, right? So there should be stopped right here. But regardless, we took this off of a breakdown once again, and you know, markets took a turn against us and we got stopped for 0.6 of an R. You might be asking, why did you get stopped out of 0.6 of an R instead of a full R stop, right? Well, if this thing went over realistically, right? This is a short, first of all, right? If this thing went over 174.60, as you can see, this was prior support, right? Prior support, and support that is broken turns into resistance, right? So if it breaks resistance above 174.60, we were probably going to get stopped out at 175 anyways, right? So we decided to just take 0.6 of an R loss. If you do go on your own trading platform and look at this day, it actually would have stopped us out for the full 1R had we not moved our stop loss down to 174.60. So, you know, once again, experience has saved me 0.4 of an R. And that is it for this week, right? We took, you know, I think 7 or 8 trades this week, made 4.5 R. Pretty good batting average if you ask me, right? You know, once again, if you do want to see all of these trades live, right, join our chat room on our website, right? Link is in the description or on the screen right now, whatever you want. And if you have any questions or comments that you want to talk to me about, join our Discord, right? I'm extremely active there, and I'm there to answer any questions you might have. Other than that, I will see you guys next week for the continuation of our trade logging series. All right, have a nice weekend, guys. Bye-bye.